Hi, investors. I'm just going to do a really quick run through the minimum mortgage size, £75,000, 65% loan to value mortgage that Gatehouse Bank are offering. And I've done some numbers. So let's have a quick look at my left screen here. And this blog post I'll link in the description. But if you're a foreign national, it's quite interesting because it makes lower cost properties accessible for mortgage. So to explain, these days or previous to this, the minimum mortgage size offered by Gatehouse and also from Hampshire Trust Bank, although they may change their policies in light of this, of course, has been £100,000 minimum sum borrowed. And what that means is that if you max out at, say, an 80% loan to value mortgage, then you're looking at something like £125,000 minimum priced property that you can buy. And obviously, if it's 75% loan to value, then the minimum is up to 133,000. So what it means in effect is that lots of these lower priced properties are inaccessible because foreign nationals couldn't get mortgages on them, buy-to-let limited company mortgages. So anyway, the benefit of this 75% LTV mortgage is that you can now buy properties circa £115,000, but the deposit sums are larger because the loan to value is lower. So I've run some numbers here just to give you a rough idea. So let's assume we've got two terraced houses. They're identical, they both need renovation work, and one is for 135 and the other for 115, so there's £20,000 difference in between them. In short, if you look at the purchase cost, it's actually higher. The cash down is higher for the smaller mortgage because of the lower LTV. And let's assume that both properties are 6% gross yield, then because you've got more equity in the lower price property, you get a bigger cash return. But really, you have to look at it from the point of view of return on investment. And if you were to go for the higher priced property, which has a higher rate of interest of 4.29% for a 2-year fixed, then your total ROI is just under 1%, whereas it's double that cash ROI for the cheaper property. So in theory, that's all good. Cash ROI higher, let's get more cash down and buy the cheaper property. And arguably, you could also get a better yield on a cheaper property, but then you have the downside of issues with the property because generally properties that are cheaper are less good quality and you have potential risks with things like damp and so on. Anyway, if we look at it from a capital growth point of view, and many of you know that I constantly go on about capital growth because the data and the numbers suggest this is where the money is made. And the real reason for that is because if you refinance on a property that has gained in growth, the cash you take out isn't taxable because it's proceeds of a loan. So, the printer went off. Okay, so getting back into it, the more expensive property with the higher loan to value, if we just look at the capital gain on that property, it'll be potentially £15,000 a year. Now, this is my calculation is based on a combination of the property going up in line with inflation and also going ahead of inflation. Now, good capital growth doesn't occur in every area. In fact, there are probably only 15% of postcode districts that are really good for capital growth, and the rest of the country is either neutral or negative. Now, in any case, the cheaper property, you get £2,000 less growth on that per year. And if we ROI the whole thing and we look at the capital gain ROI, then you can see it's higher for the higher priced property with more finance. So it's like with all these things, it takes you into that old question: is it better to gear up and suffer a smaller cash return, or to gear down, have a greater cash ROI, but a smaller um, capital gain ROI? And ultimately, the answer is it depends on what you know and what you're certain of and which part of the property cycle you're in. But going back to the main thread here with the Gatehouse mortgages, it does make these lower cost properties accessible. And I think if you're interested in cash ROI as a bias, let's say, for the investment, then these lower LTV, lower interest rate mortgages are good news, just because they open up a segment of the market that's previously been closed to foreign nationals. Anyway, I hope that helps. Thanks again, and until next time, investors, good investing.